Hello, everybody. Good evening. I hope you all are doing well and the summer is treating you kindly in your city today. I'm Diksha Unyal from the marketing team of Zoho Books, and I welcome you all to today's session on the basic concept of GST and its implication on businesses. Let me start off the session by introducing you to our speakers of the webinar today. Today's webinar will be led by our tax expert, Mr. C.A. Bimal Jain, and we also have Mr. Sami from the marketing team of Zoho Books. This is our third session with Mr. Bimal Jain, and I'm sure some of you would already know him. But for those who are new for today's session, let me start off by giving a brief introduction on C.A. Bimal Jain. So, Mr. Bimal is a member of Institute of Chartered Accountant of India since May 1994 and a member of Institute of Company Secretaries of India since December 2006, along with a bachelor's degree in law. He has more than 21 years of experience in indirect taxation and specializes in all aspects of goods and services, tax, service tax, VAT, central sales tax, central excise, customs, foreign trade policies, SEZs, export oriented units, and export and import laws. He has working experience of more than 18 years in renowned companies like LG Electronics India Private Limited, Honda Motorcycles and Scooters India Private Limited, Hindustan Development Corporations, and presently he is the executive director of A to Z Tax Corp LLP. He's also a chairman of Indirect Tax Committee of PhD Chamber of Commerce and member of eminent facilities and faculties in Indirect Tax Committee of ICAI, ICSI, and ICMA. He has also been a keynote speaker at Guinness World Record made from ICSI in the largest taxation Bimal Jain lesson on GST, which was attended by 4,500 plus participants, breaking the earlier record of Japan. So I welcome you, Mr. Bimal Jain, and thank you so much for coming today and for interacting and sharing your expertise with our audience.
Good evening, Diksha.
Yes, sir. Before I hand over the session to Mr. Bimal Jain, I would actually like to give a brief walk through the webinar platform that we're using today. This session is being hosted on Zoho Showtime, which is a comprehensive solution for training businesses through which users can deliver virtual classroom and on-demand training. As you can see on the left-hand side, you will have two options available. One is a chat bar and the other is a questions tab. You can use the chat option to drop your thoughts and interact with us and the fellow attendees. And in the questions tab, you can drop your questions that are related to webinars. So we request you all to use the questions tab to ask your questions and not the chat box, because through the questions tab, we'll be able to keep track of all your questions and have them answered one by one. Also, this time we have a special offer for all our webinar attendees. So from today's session, we will select 5 lucky winners who will get an informative free GST book, which is authored by Bimal Jain himself. So you can share your reviews of the webinar on Twitter by using hashtags GST with CA Bimal and hashtag Zoho Books, and you can win a chance to get the ultimate GST handbook. So without any further delay, I now hand over the session to Mr. Bimal Jain. Sir, the stage is all yours.
Thank you, Diksha and Zoho team for organizing this webinar. This webinar is very important. We are already almost 5 years of GST introduction in the country from July 1, 2017. But still there are a lot of basic concepts which we are struggling with. And we are looking for the answer. We want to understand these basic concepts and its implication on our businesses. Businesses can be manufacturing, can be service sector, can be a trading sector. Today, I will try to deliberate on the basic concept and will also take the test of all the participants of today's webinar. And I'm sure all of you are going to participate in all those questions which I'm going to ask you today. And you can check out your basic concept on GST. Today, you can take a paper a piece of paper and pen or pencil, whatever available to you. Enjoy this 1 hour with no PowerPoint presentation, no technical provision, but yes, GST. We are going to understand the concept for which we are sitting today. So let me start. When GST started in the country, we all know that Constitution Amendment Act 2016 is important, which has provided amendment in the Constitution for the introduction of GST in the country. So what is important here? Constitution Amendment Act 2016 and GST got introduced on July 1, 2017. Why GST got introduced in the country? The first and foremost question which comes to everyone's mind. I can tell you the four regions. The four regions are: first, multiplicity of taxes is subsumed into one basket. Around 17 indirect taxes and 23 cess merging into one basket. This was the first advantage. Second, double taxation, which was existing in pre-GST era, like on restaurant. We were paying VAT and we were paying service tax. Construction services, even the software, we were paying VAT and service tax both together. A lot of other examples are existing for double taxation, but that is gone in GST. GST, you are getting clarity. Its supply can either be supply of goods or supply of services. Where from you come to know, and this is a question to you, where from you come to know a particular supply is a supply of goods or supply of services? You continue to answer in a chat box, and this is how you can check it out that whether you are really aware of. In case you are not aware of, you can write down those answers. Schedule 2. Schedule 2 provide the clarity. A transaction can either be supply of goods or supply of services. So double taxation gone, which was another advantage in GST. Third, cascading of taxes, tax on tax. In pre-GST, we have seen a lot of tax credit was not available, and it was a part of our costing and pricing. To certain extent, this cascading has gone in GST. 100% no, because petroleum products are still out of GST. So we pay pre-GST taxes, of which no credit available. Even within the GST law, there is certain provision, and that is saying even for the usage in the course of furtherance of business, still credit is not available. Please tell me under which section you find the provision that you are paying the taxes on goods or services in the course of furtherance of business, but still credit is not available. Section 17, subsection 5 of CGST Act. And to that extent, cascading still continuing. And last and foremost, GST is a one nation, one tax. I normally say GST law is a Gita, Bible and Quran. Irrespective of any language, religion, race and caste, whatever GST applicable in Delhi, from Kashmir to Kanyakumari, irrespective of any language, same GST law applicable, and this is the foremost advantage of GST introduced in the country. So I've said 4 advantages to all of you. Now the next point. In GST, the concept of manufacturing, provision of services, trading of goods, all gone because 17 indirect taxes subsumed along with 23 cess subsumed into one basket. So what is the taxable event in GST? Next question. If at all GST leviable, what is the taxable event? And next question, under which section you find that this is what the chargeability. Unless chargeability is there, no GST leviable, right? So under which section you find that chargeability, taxable event is existing? Section 9 of CGST Act, Section 5 of IGST Act. Section 9 subsection 1 is a chargeable section. creating the taxable event, and these are the basic which we must know. And what the section 9 subsection 1 says, there shall be levied tax, CGST and SGST on intra-State supplies of goods or services or both, except alcoholic liquor for human consumption. So alcoholic liquor for human consumption is being kept out from GST on a value determined under section 15. So there shall be levied a tax called CGST and SGST on intra-State supply of goods or services. So there has to be supply, there has to be goods, there has to be services on the value determined under section 15 of CGST Act at a rate not exceeding 20% as recommended by GST Council, and that should be collected in such manner as may be prescribed. So section 9 subsection 1 is a chargeable section, and it is saying, Bimal, for intra-State supply there would be CGST and SGST. When a supply is intra-State, thumb rule you have to keep to your mind, when location of supplier and place of supply within same state, transaction is termed as intra-State, CGST and SGST leviable. And when transaction is interstate, and for interstate we have to go back to IGST Act, Integrated Goods and Services Tax Act. Section 5 subsection 1 creating chargeable section and talking about levy of IGST on interstate supply. So when transaction is interstate, when location of supplier is in one state and place of supply is in other state, so they are not in same state, they are in two different states. That's the reason it is called interstate supply. Having said that, there are 2-3 components which is very, very important. The first component is supply. There has to be supply. Then there has to be goods or services. Then there should be valuation, value determined under section 15 of CGST Act. Then there should be rate prescribed. So we are going to discuss one after another everything. Now section 9 subsection 1 is creating chargeability on forward charge basis. What is this forward charge? GST generally and normally going to be levied by supplier of goods or services. This is called forward charge method, normally and generally. Now we have to really understand the meaning of basics. What is the meaning of supply? I'm not going to discuss fully, but I am willing to give you the color and flavor of the term which is important for the basic concept. Supply is being defined under section 7 subsection 1 clause A. Supply includes, without defining what is supply, the law is saying supply includes all forms of supply of goods or services or both, such as sell, transfer, barter, exchange, licensing, leasing, rental or disposal, made or agreed to be made for a consideration, and consideration can be monetary and non-monetary, by a person, and there's no reference of to a person, by a person in the course or furtherance of business. So this is a definition of supply. And let me tell you, term manufacture was defined under Central Excise Act under section 2 subsection F of Central Excise Act 1944. The term manufacture is not settled as yet. In my humble submission, the term supply, the way it is being defined in GST law, it is going to be 100 years of practice, I'm telling you. There has to be supply, then only chargeable. And the way term supply is being defined is too wide a definition. Let's take one or two examples. Let's say I'm giving or supplying goods or services to you, and I'm not charging any money. There's no consideration. Tell me GST leviable, first point. I'm supplying goods or services, but no consideration. Whether GST leviable, answer is no, because there is no consideration. But do you think that when you're supplying goods or services and no consideration, it has got other implication in GST law? Other implication would be on this outward supply, you have not paid the GST, and that will be considered exempted. And then you need to reverse credit, GST credit, common credit, in terms of rule 42 and 43. So you have to keep to your mind. Second situation, had it been the transaction between related parties or distinct person, supply of goods or services between distinct person or related person in the course of furtherance of business, but no consideration. Whether GST leviable, say yes or no in the chat box. Whether leviable, and one of the prominent example which I can give it to you, stock transfer of goods. In pre-GST era, stock transfer of goods was not chargeable to VAT. But in GST, you have to understand the meaning. When you're stock transferring goods from one branch to another branch, and both the branch are separately registered in GST under same PAN number, so they are called distinct person. Then the cross-charge concept. So head office sitting, your CEO, CFO, common HR and accounts, IT team sitting. Whether HO is giving services to the branches, whether cross-charge applicable, whether there is supply of services, even though no consideration is flowing, but still it is chargeable to GST. And where from it is coming? It is coming from Schedule 1. Schedule 1. It is coming from Schedule 1, and there are 4 specific entry. Out of 4 specific entry 2 is referred the deemed supply, even without consideration, GST leviable. Having said that, now next point, which is very important, Schedule 1, I said there are 4 specific entry. No consideration, but still it is called deemed supply. Am I right? Having said, now within the supply definition, there are other definition also provided. They are referring to Schedule 2, which I have already asked you. The Schedule 2 is containing specific transaction, and those transactions are only for determination whether that supply of goods or supply of services. Another Schedule 3 reference is there. And let me take one example and ask you. Let's say I'm getting one order from US. I'm registered in Tamil Nadu. Bimal Jain registered in Tamil Nadu, getting one order from a customer in US. Now, I can supply goods from India to US. That is one situation. Another situation, instead of supplying from Tamil Nadu to US, what I'm doing, I'm identifying a particular supplier, vendor in Korea. And this supplier is then sending the goods to my customer at the US. So goods are being purchased from a vendor or supplier in Korea and directly dispatched to the customer at the US. So we can take an example of $100 is my purchase cost. It is coming in my books of account, $100, and $120 is my revenue, which is coming on the credit side of my PL account. Let's test yourself. On purchase, of $100 from Korea vendor, whether any GST leviable. Please tell me in a chat box, yes or no, leviable or not leviable. Answer would be no GST, no custom duty, no IGST, because those goods are not entering to the custom frontier of India. No custom duty, no IGST. Well done. So debit side of PL account, $100 resolved. Second part, $120 coming on the credit side from your customer of US to whom you have supplied the goods from Korea to US. Tell me any GST leviable, any GST leviable. So some of you may say yes, some of you may say no, but answer is no GST, and this specific transaction, it's covered in Schedule 3. Schedule 3. So employee giving services to the employer under employment contract and getting paid salary, and salary is being considered neither a supply of goods nor supply of services. So Schedule 3 is containing 8 specific entries, 8, which is being considered neither supply of goods nor supply of services. Sale of land, sale of building after completion, these are the transactions referred. Now, having said that, the important test, $120, Korea to US, US customer giving it to you, $120, and a lot of you have given answer to me, no GST leviable, because this is falling in Schedule 3. So your outward, you have not charged GST. I'm asking a very good question. There may be some common input ITC credit with you lying in your books of accounts. Do we require to reverse ITC, common ITC pro rata to the extent of by this outward supply on which no GST is being charged? Tell me yes or no, whether any ITC reversal would be required. Yes or no? So I'm finding a lot of you are answering in a chat box, and well done. No reversal of ITC. Where it is being written under section 17, subsection 3. Kindly read the explanation. No reversal would be required even though your outward age not chargeable to GST. So this is the added advantage. Having said, supply definition falling under section 7, referring about Schedule 1, Schedule 2, and Schedule 3. So this is the basic concept. Now, when you move further, there's a new concept and new judgment has come from Honorable Supreme Court, which you will like most. Concept of composite supply versus mixed supply. Composite supply versus mixed supply. What is composite supply? When two or more taxable supply naturally bundled in conjunction with each other, naturally bundled, then that composite supply going to be taxable on the basis of which is principal supply. And mixed supply means two or more supply bundled together, but not naturally bundled, in ordinary course of business, and sold under single price. Then that combo would be taxable on the basis of highest rate of particular supply of that combo. That is what the concept of composite and mixed. But the silver lining, Honorable Supreme Court judgment in the case of Mohit Mineral case, which has come just 3 days back. 3 days back. And the concept of composite supply was the only point which is being considered by Honorable Supreme Court while deciding the case. So let me tell you the fact so that you like the fact, then you can answer it. I'm importer of goods. I'm importer of goods in Tamil Nadu. I'm importing goods on CIF basis, cost, insurance, freight basis. So it means I'm paying the cost of the goods, insurance and freight to my foreign supplier. Now, when these goods are coming to India, I'm paying this amount to my foreign supplier. Then freight is being arranged. Freight is being arranged by whom? Freight is being arranged by foreign shipping line to foreign supplier. So this freight component is paid by foreign supplier to foreign shipping line. Now, the big dispute was in this particular Mohit Mineral case, there was specific notification 10/2017 under IGST, read with 8/2017 under IGST, and issue was being importer. When I'm paying custom duty including IGST on a transaction value, on accessible value, which includes the freight component. And I paid basic custom duty and IGST as leviable when I imported the goods. Question is, do I again require to pay IGST on freight component, ocean freight? When goods are being imported by vessel, do I require to pay IGST again on ocean freight under reverse charge method? This was the dispute. So what Honorable Supreme Court has said, I do not know how many of you have read that judgment, but that judgment is only decided on this point. Only decided on this point. When importer is importing goods, where freight component is already being included, so 2 or more taxable supply. Naturally bundle in ordinary course of business. Principal supply would be supply of goods on which importer has paid custom duty including IGST. Then he need not require to pay IGST on ocean freight under RCM method. And that is how the Honorable Supreme Court has said, if IGST demanded on ocean freight under RCM separately, then it is in violation of Section 2, Subsection 30, which is talking about composite supply. Read with Section 8 of CGST Act. Only on this point, Mohit Mineral case is being decided in favor of a taxpayer. So concept of composite supply, very, very important. So you need to pay attention. Having said that, supply is being discussed. Then you need to understand the meaning of goods or services. Goods are being defined under Section 2, Subsection 52, which is every kind of movable property other than money and securities, including actionable claim, growing crops, grass, and things attached to. Service is being defined under Section 2, Subsection 102 of CGST Act. Service means anything other than goods, money, and securities, such a wide definition. So what you have to focus, you have to first focus on supply, then whether a particular item is goods or services. Having said that, now we are talking about on value. On what value GST leviable, and value you have to go back to Section 15, 15. So let's start with the next question. I'm a supplier in Delhi. My goods MRP is 100 rupees. My goods MRP is 100 rupees. And you all are my buyer. You all are my buyer. We are not related. We both are not related. I'm selling at 80 rupees, 80. So MRP is 100, but I'm selling at 80 rupees. Please tell me what would be the value on which I will levy GST. It is 100 rupees MRP or it is 80 rupees, which is the transaction value, selling price. So no concept of MRP in GST. And Section 15, which is a valuation provision, clearly saying GST going to be levied on a price paid or payable. And second condition, when supplier and recipient are not related. keep to your mind, transaction value concept is applicable only when two conditions are satisfied. What are those two conditions? Price paid or payable, which is 80 rupees. And second condition, we should not be related parties. So related parties is being defined under the GST law in same section 15 by way of explanation. Now next question, if we are related party, please give me the answer. MRP 100, transaction value 80. If we are related party, can we accept and adopt 80 rupees as transaction value? Say yes and no in a chat box. Say yes and no in a chat box. I've told you twin condition we need to satisfy. If we are related, then what happened? If we are related, then what happened? Then we have to go back. Then we have to go back to valuation rules. And rule 28 going to be important. Rule 28 going to be important, and rule 28 is saying open market value or like kind and quality, or 110% cost of or provision or residue method. And that is what is being prescribed with two proviso, that it would be at least 90% of selling price of my recipient unit, or if ITC available to the recipient unit, then any value which has been picked up by the supplier would be considered as deemed open market value. So you have to keep to your mind. And certain provision, quickly I am running up. Transaction value, whenever you are arriving, let me ask one question, and with this example you will understand. If I'm importing goods, let's say for 100 rupees, and I paid basic custom duty, let's say 10 rupees, and IGST, let's assume I paid 18 rupees. I'm selling now these goods to my other party. So when I'm selling my goods, it is at 120 rupees. So there's a component, separate component, 10 rupees basic custom duty and 18 rupees IGST. My question to all of you, what would be the transaction value in this case? I'm selling at 120. There's basic custom duty, which is 10 rupees, which I have paid. And there's IGST, 18 rupees, which I have paid. Please tell me, do I require to add custom duty in my transaction value for the chargeability of GST? Say yes and no in a chat box. Say yes and no in a chat box, so that I get a clarity that you know these answers well and things are really right. Yes, yes. So basic custom duty need to be added to determine the transaction value. What other component need to be added? If supplier is liable but incurred by the recipient, need to be added. Any incidental expenses which is for supply need to be added. Any interest and delay charges need to be added. Any subsidy which is linked to the pricing of goods, supply of goods or services need to be added, but subsidy paid by central and state government need not require to be. And what need to be deducted? Wherever you are giving discount, before supply or after supply, with due compliances as prescribed, you can deduct from the transaction value. So let's discuss one more example. Let's say my MRP is 100. I'm selling at 80 rupees normally in the market, but to a certain customer, I'm giving more 10 rupees discount. I'm giving 10 rupees more discount. So effectively from some customer, I'm charging 70 rupees. So what would be transaction value for the chargeability of GST? 100, 80, which is open market value, or 70, which is being given for special discount offered to a certain customer. So tell me what would be the transaction value? Please, I'm looking for. Is 70 rupees or what? Okay, 70 rupees if they are unrelated party. Appreciate it. 70 rupees if they are unrelated party. Well done. So valuation part is over. Now rate to be charged, GST rate to be charged. We all know there are different rate applicable, 0.25%, 0.25%, 3%, 5%, 12%, 18%, 28%. My question to all of you, these rates are applicable for different goods and different services. Where from you identify and where from you come to know that this is the rate applicable? Let's say if you are a person engaged in business, where from you will dig out and check it out what rate applicable to my goods or services. Do you have any answer with you? And that's what I'm looking for. Where from you will come to know. Note down today, and this is going to help you all. Okay. So because Rai is saying some goods rate HSN SSC table, no, please note now. Please note now. Whenever you are looking for the GST rate for goods, you go back to notification number 1/2017. Please note down somewhere. Tomorrow you would be GST expert. Whenever you are looking for GST rate on goods, go back to notification, base notification 1/2017 as amended as on date, which is available for goods. What is for services? 11/2017. 11/2017, like Mohit Gupta was the first one to write in a chat box. 11/2017. So I've given you the flavor where from you will get the GST rate applicable. And you will get the HSN code and SSC code. HSN code for goods, SSC code for services. Next question to all of you. Do you know whether HSN code and SSC code and to what number of digit you need to quote on your tax invoice? I'm asking you. You're a supplier and you have rightly said HSN and SSC code. HSN for goods, SSC for services. But how many digit? So I'm giving you the answer. If I'm a supplier, taxpayer, registered person, if my aggregate turnover threshold is less than 5 crore in preceding financial year, then for B2B supplies 4 digit. And for B2C it is optional. But if my aggregate turnover is more than 5 crore in preceding financial year, then compulsorily HSN and SSC code would be 6 digit, irrespective of fact whether B2B or B2C. And for export and import, 8 digit. And there's certain item for that 8 digit is being prescribed, like for chemical. So this is what you need to disclose on your tax invoice. So rate is being discussed, valuation is being discussed, and then we have discussed the supply. Now coming is will be collected in such manner as may be prescribed. Collected in such manner as may be prescribed. So I'm starting with question. I'm a supplier of goods. I received the advance from you. You all are my customer. I received the advance from you 10 lakh rupees today for supply of goods after 2 months. It is for supply of goods. Tell me on advance GST leviable, and that too for supply of goods at a future date. Tell me GST leviable, and that's what I'm looking for the answer. Yes and no. Please tell me. Yes and no. Okay, a lot of yes and no is coming in a chat box. Very active chat box today. I'm finding very active, and we all are enjoying. Thank you very much. No GST on advance money for supply of goods. Supply of goods. From which date? From which date it is applicable? Let's check it out. From which date applicable? So Mayur is giving answer 15th of November 2017. 15th of November 2017. No GST on advance money for supply of goods, but for supply of services, GST leviable. Next question to all of you. Next question. As we all know that e-invoicing provision is made applicable. And I'm sure today's Sami is going to make 5-10 minutes presentation from Zoho side. Now, how this e-invoicing is made easy and how we can do the GST compliances, that is going to be easy for you from Zoho platform. That is later part, but we all know that e-invoicing provision made applicable from 1st October 2020 with a threshold amount of 500 crore, reduced to 100 crore from 1st January 2021, reduced to 50 crore from 1st April 2021, reduced to 20 crore from 1st April 2020. Now in time to come, it would be threshold of 5 crore. So as on date, if your aggregate turnover is more than 20 crore, and this need to be checked from any financial year starting from 17-18, you crosses the threshold limit, you need to go for generation of e-invoice. I get this question very frequently in the market. That's the reason I'm asking this query. You're a supplier of goods. You're removing goods today, which is on 26th of May today. Somewhat you're not being able to generate e-invoice because IRP, invoice registration portal, is not working. Is it possible that you can remove the goods without generating IRN number, invoice reference number, which is called virtually e-invoice? Just raising tax invoice as we normally do in the past, can we do that? Please tell me. Answer is yes or no. Okay, so a lot of yes and no is coming in a chat box. Okay, my answer to all of you. See, section 31 is very, very important. And section 31 is saying when to raise invoice. And this invoice is having e-invoice provision at par. So this invoice reference is being given to the e-invoice provision as well. So what is time to raise invoice? The supply involves movement of goods from Delhi to Tamil Nadu. Then invoice to be generated either before or at the time of removal of goods. Please check out the provision. Invoice to be raised before or at the time of removal of goods, where supply involves movement of goods. So you can't postpone generation of IRN number. In all other cases, it is delivery of goods or when goods are made available. So you have to be very careful. When I'm talking about e-invoice, next question to all of you, it is only for goods or for services also? Say yes and no. It is only for goods or services also, both. It is for both or only for goods? Still a lot of answers are not correct. It is for both, for supply of goods and supply of services. And there are certain parties who are kept out of e-invoicing provision, like government department, SEZ unit, but not the developer, banking and financial company, including NBFC, GTA, passenger transportation services, and admission to multiplexes cinema. These are specific exclusion that need not require to generate e-invoice. And there's one provision of QR code for B2C supply. B2C supply threshold is 500 crore rupees and applicable from 1st October 2021. 1st October 2021. And now e-invoice, one more question. If you're exporting, let's assume you're exporting, and your threshold is more than 20 crore. Do you require to generate e-invoice? I'm asking this question. Please, maybe a simple question for all of you, but still I'm asking, for export of goods or services, do you require to generate e-invoice? And answer is yes. It is for B2B taxable supply, debit note, credit note, and export. Perfect, perfect. All right. Having said that, now the next foremost question. I'm a service provider. Let's assume I'm a service provider. Assume I'm a service provider. I have given the opinion to you today. Let's say you wanted one opinion from my side. I given you the opinion. Legal opinion I given to you on 26th May 2022. I have not raised any invoice. I'm giving you some multiple question and I want to have answer from you. One situation, I got some advance money for this opinion, 1 lakh rupees on 25th May. And I given this opinion today on 26th May, right? Please tell me it is for supply of services. Advance already being received. What is time of supply? What is time of supply? If at all you have to calculate, what is time of supply? It is 25th May when you got money. It is 26th May when you have given the opinion, rendered the services. Okay. It will always be earliest of 2 or earliest of 3. So time of supply is important. When chargeable section is saying it shall be collected in such manner as may be prescribed, then time of supply going to be important. Point of taxation going to be important. And for supply of services, they are saying 3 provision. When you are receiving the money, date of invoice, if invoice is not raised within a stipulated time period, which is 30 days, then date of provision of services, date of provision of whichever is earliest. Yes, I know that we will pay GST for the month of May, but for understanding sake, this is very important. What would be time of supply? 25th May when you got the money, or 26th May, which is provision of service and raising of invoice? Technically, answer would be 25th May. Though we agree that everything happening within the month of May. Now let's make it complicated one. Let's make there's no advance money, and this is what I want to see. This is what I want to see. Please tell me. I have not received any advance money. 25th May, I have not received anything. 26th, I have given you the opinion. And I did not raise the invoice. I did not raise the invoice until, let's say, 15th of August. Let's say until 15th of August, I have not raised the invoice. So I have not received the money. I have given the services on 26th May. And until 15th of August, I have not raised the invoice. What is the time of supply, POT, for discharging GST? Please tell me. So a lot of you are giving different answer. It would be date of provision of services, 26th May. 26th May. If I have not raised the invoice within stipulated 30 days from the date of provision of services. So 26th May going to be point of taxation, time of supply for discharging GST liability. So hope you have understood the importance of time of supply as well. So it shall be collected in such manner as may be prescribed. So a lot of you are getting, all right. So those who are giving the right answer, appreciated. Those who are giving wrong answer, more appreciated, because you are trying. You're trying to give the answer and checking out your understanding. It is 30 days. I mean, going 30 days. Now come back. So section 9, subsection 1 is being discussed. Section 9, subsection 2 of CGST Act talking about petroleum product will not be chargeable to GST unless GST Council decide chargeability on petroleum products. So petroleum products are kept out only for the time sake till the time GST Council decide. But now the important section come. Section 9, subsection 3. and section 9 subsection 4. Yesterday we have run a poll on our Twitter, and Diksha was telling all of you that you can kindly give the answer. And 5 out of total participants today, and I do not know how many as of now, we got almost 531 participants now. There are 5 participants who are going to get my latest 7th edition GST Law and Commentary book of 4 volume. And today, whatever questions I'm doing, these are basic, but in book, you will find advanced analysis. You will find everything thoroughly discussed, practically discussed. So 5 participants today are going to be the lucky winner to get this book from, complimentary book from Zoho Books. I ran a poll yesterday and poll watch. Let me say the poll, and then I will take the answer from you. Poll watch, you are a registered recipient. You are a registered recipient. And you are purchasing goods or services from unregistered supplier. So I'm reading the poll because I got a lot of answers, and these answers requires clarity. You are a registered recipient. You purchase goods or services from unregistered supplier. And I've asked only one question, whether it is chargeable to GST under RCM, reverse charge method. That is what I asked yesterday on my Twitter account. You can go back to my Twitter account and check it out. And we got more than 1,500, poll voting, and it is still on. If you want, you can go back to my Twitter and join, and then start voting also. Listen very carefully, and then we will conclude this part. I said GST generally and normally forward charge on supplier of goods or services. But section 9 subsection 3 of CGST Act, read by section 5 subsection 3 of IGST Act, there is reverse charge liability on recipient of specified goods or services. Listen very carefully. Section 9 subsection 3 read by section 5 subsection 3 specify certain goods, specified. When I'm saying specified goods, it is generally not applicable unless it is specified. Specified services, only for specified goods and services, RCM applicable in the hands of recipient. So where from you come to know that which goods are specified for RCM liability? Please tell me. I want to see the answer in a chat box. Where from you come to know that specified goods are falling? Specified goods. Aparna, no, you're not giving me. Still, I'm not getting good answer in a chat box. No, I'm not getting a. Mayur is the first one. I could see he has given the answer. 4/2017. Note down today. For specified goods subject to RCM, you have to go back to 4/2017. And for services, please tell me for services. So Anand is the first one responded to me. 13/2017. 13/2017. 1-3. 13/2017. Very well done. So you know today, for section 9 subsection 3, read by section 5 subsection 3, if something which is RCM, reverse charge method, recipient to pay, for only specified goods is not generally applicable. For specified services, for goods 4/2017, for services 13/2017. Now that's supplier may be registered or unregistered, irrespective of fact. Irrespective of fact, supplier is registered or unregistered. So what is important? Specified goods or services. Having said that, come back to section 9, subsection 4. And this is important. This is important. When GST law got introduced, they have said if registered recipient is procuring taxable goods or services, word used taxable goods or services, from unregistered supplier, there was RCM until 13th of October 2017. Please be careful. Listen very careful. Until 13th of October 2017. After that, there is no GST under RCM. If you procure goods, taxable goods or services from unregistered supplier, not at all. Only from 1st April 2019. 1st April 2019, section 9 subsection 4 got amended. And as per amended provision, it is only for specified class of taxable person for specified goods or services, and only one specified class, which is developer for real estate transaction. If they procure from unregistered supplier, that is only the transaction as on date, subject to RCM, otherwise no RCM other than this transaction. Hope I'm clear to all of you. Hope all of you got the clarity. If today you procure any goods or services from unregistered supplier, no RCM except real estate developer. Having said that, section 9 subsection 5, which is important to be read. There are certain e-commerce operator, and through e-commerce operator, certain specified services are being supplied. They're deemed supplier like Ola, Uber. Now restaurant has also come. So section 9 subsection 5 is a different provision altogether. So I've said everything in the very nutshell manner, that there has to be taxable event, supply, goods or services. I given the reference of schedule 1, schedule 2, schedule 3. Then I talked about valuation. In between, I discussed when I was discussing supply, composite supply versus mixed supply, valuation, then rate applicable, then RCM discussed. Now question comes, is there any exemption that no GST leviable? Is there any exemption? Then no GST leviable, section 11 of CGST Act, read with section 6 of IGST Act. There may be absolute exemption or maybe conditional exemption. And there are certain goods notified that they are exempted. And there are certain services notified they are exempted. Where from you will come to know? Please tell me. For goods, what you will look at? So Deepak Kumar is giving the answer. For goods, which is the notification? You will look at that these goods are exempted. 2/2017. 2/2017. And for services, 12/2017. 12/2017. So you got this clarity out, right? That this is being discussed. Now, 1 or 2 points, and Diksha is also reminding me that, sir, 1 hour session, it is about to complete, and we got little question answers also. So I will take 5 minutes, then we will have question answer session. Today's session was to create basic concept, to create your interest. I'm sure you're liking today's session because you're getting a lot of clarity on basic concept. Am I right in saying so? Please tell me in the chat box, because I want you should be actively saying so. Because you know what I'm trying today, that at least you get a clarity on the basic concept and its implication on business. A lot of things I've tried my best within 1 hour time to get it clarified. Now, place of supply is very, very important, right? Two case study, quick case study. Place of supply only to identify place of consumption. GST is a destination-based consumption tax. It will accrue to the state where ultimately it is going to be consumed. That is the concept in GST. So manufacturing state will not get anything. It is consuming state who will get the GST component, SGST component. And why this manufacturing state going to have loss? Initially, central government has committed 5 years tenure to compensate through compensation cess if any loss occurred to them within growth of 14% as a base year of 2015-16 they have promised, which is about to complete in June 2022. So it is consuming state. I would like to do only two things. Place of supply only to identify whether transaction is an intra-state or interstate. Place of supply does not mean that you have to take registration at place of supply. So have clarity. I'm finding a lot of confusion in the market. For what reason I do not know, but a lot of confusion. And let me start with one case study. Diksha, can I continue for 10 minutes? Because I started this case study. I want to finish this case study. Diksha, are you there?
Sure, sure. Yes, yes, yes.
10 minutes,
Our
10 minutes.
audience are very enthusiastic and they're loving the session. I can see that the chats are just overflowing and it's just amazing. I don't want to interrupt the the
Oh,
flow of things that's going on. So
okay,
please, please continue.
give me 10 minutes only. Give me 10 minutes
Sure,
only.
sure, sure.
I'm a resident in Delhi. I'm resident in Delhi. I got two commercial property in Tamil Nadu. Or let's say I got one property in Tamil Nadu, one property in Karnataka, commercial property, immovable property. I have let out these commercial property to a client in Tamil Nadu and Karnataka. And question which I'm asking and which I've asked on my Twitter, I'm Delhi resident. My property is located in Tamil Nadu and Karnataka. Do I require to take registration in Tamil Nadu for Tamil Nadu property, Karnataka in for Karnataka property? Do I require to take registration? And let me tell you, answer is no. I need not require to. Please, I need not require to take registration in Tamil Nadu and Karnataka. For registration, of course, we understand we have to take registration from a place, from the state where from we are supplying goods or services. So location of supplier is being defined under IGST Act. Location of supplier is defined under IGST Act. And location of supplier means, listen very carefully, the place where you have taken the registration, which can be at most Delhi, or fixed establishment, which is characterized by sufficient degree of permanence of human and technical resources, or establishment most directly concerned, which is Tamil Nadu and Karnataka, and last, usual place of residence. Since I'm a resident of Delhi and neither of the provision applicable, my usual place of residence is Delhi, I can continue to be registration in Delhi, even though commercial property located in Tamil Nadu and Karnataka, and would be charging IGST location of supplier Delhi because I take registration in Delhi. And just imagine if I'm having 29 commercial property in 29 different states. With a GST law, investors taking 29 registration. Whether it is going to be ease of business? No. So as per GST law, where you reside, where you are registered, that is Delhi. You take only Delhi registration. So what is the place of supply? Location of immovable property, Tamil Nadu and Karnataka. So I will charge IGST to a client in Tamil Nadu and Karnataka, of which Tamil Nadu and Karnataka client will take credit. Only problem in this concept is, if any input services is being procured pertaining to Tamil Nadu property and Karnataka property pertaining to that, then that supplier of service will charge CGST and SGST. And since you are not having registration in Tamil Nadu and Karnataka, to that extent it is a cost. To that extent it is a cost. That is the only, but it is your business exigencies. You may decide accordingly. Second case study pertaining to goods. Listen very carefully, time is short. I want to complete fast. You are a Tamil Nadu registered customer, Tamil Nadu. Because I'm saying Tamil Nadu because Zoho is in Chennai, so I'm referring to them. So you are registered in Tamil Nadu. You come to Delhi at my shop in Delhi. I'm registered in Delhi. So supplier registered in Delhi. You are a customer registered in Tamil Nadu. You come to my factory in Delhi or my shop in Delhi. It is B2B supply. I hand over the goods to you at my factory gate, at my factory in Delhi. But the transaction would be intra or inter. Location of supplier is Delhi. I hand over the goods to you at my factory gate at Delhi, but you are registered in Tamil Nadu. Transaction is intra or inter. Lot of you are giving the answer intra. Sorry to say that. And just think. Those who are giving me answer intra, just think. If it is intra, then I will charge CGST and Delhi SGST. Whether credit is going to be auto-populated in your registration in Tamil Nadu? First question. Whether credit is going to be auto-populated? No. Second, eBay bill need to be generated. Let's say transaction is more than 50,000. eBay bill need to be generated. So goods are going to be moved from Delhi to Tamil Nadu. So can I treat my transaction as an intra-state when eBay bill is an interstate? Second point. And third, there is section 10 subsection 1. Section 10 subsection 1 clause A of IGST Act. It says wherever supply involves movement of goods either by supplier, so supplier is dispatching goods for destination to Tamil Nadu, or by recipient, so in ex-works transaction, when I handed over the goods to you at factory gate at Delhi, you will deploy the transporter and then take these goods from Delhi to Tamil Nadu, or by any other person, place of supply where delivery terminates, which is Tamil Nadu. Hence, transaction is an interstate supply. IGST to be levied, which will auto-populate in your GSTR 2B. And eBay bill is also interstate from Delhi to Tamil Nadu. Transaction is interstate. So those who have given the answer as an intrastate stands corrected. Had it been B2C supply, I'm registered, but you are coming from Tamil Nadu, you are not registered. And this question is $1 million question. I also tweeted and did the poll. I've raised the poll on my Twitter as well. And let me tell you, if transaction value is more than 50,000, transaction value is more than 50,000, then as per rule 46 sub rule E of CGST rule, being supplier, it's my responsibility to capture name and address of the recipient. So I need to capture your name, your address, your delivery state name and state code on my invoice. So supplier is responsible wherever transaction value is more than 50,000. In terms of rule 46 sub rule E, I need to capture your name, I need to capture your address, I need to capture the state where from you are coming, I need to capture state code, which is Tamil Nadu. if it is more than 50,000. If I'm capturing state as Tamil Nadu, state code as Tamil Nadu, then I will charge IGST, and SGST component of IGST going to accrue to the Tamil Nadu because GST is a destination based consumption tax. It will accrue to the state of Tamil Nadu. Only criteria is if it is more than 50,000. If it is less than 50,000, you do inter, no one is stopping. And that is what the provision says so. So within the basic concept, I added a flavor of some advanced, analogy, which you will find that it is interesting to you. So this was pertaining to goods. Coming to the last part, and which is the last part of today's deliberation. Listen very carefully. Last part. GST, I know 5 years. Lot of basic concepts are still we are finding confusion and doubt. Today we tried within 1 hour, more than it is 1 hour now. It is 1 hour, 10 minutes now. We are doing this webinar. We plan for 1 hour. We will take up certain questions also. Don't worry about that. Zoho has taken this initiative to handle. Of course, I'm partnering with them. And we are trying to create synergy and energy both together. Of course, GST is a 5 years old, but still we both are trying to pass on the GST, the understanding, the concept, of course, in a lucid manner, in simple manner. You continue to, be part of this webinar series of Zoho Books, and we will have a lot of different topics coming up every month. Be part of it. You can join my YouTube channel as well for a lot of GST understanding, my Twitter, my any handle along with the Zoho Books, and we can take this journey further. Today I've tried my best within a very short duration to give you the basic concept. I'm sure that you have liked the basic concept, its implication on business. Of course, time was short, but within the time frame given to me, I've tried my best, and I've really tried to the best of so that you get maximum, you understand maximum. That was the objective. So thanking each one of you for the part of today's webinar. But before we end, handing over to Diksha for open house. Any question which you want to ask, I'm available. Please. Diksha, back to you.
Yes, thank you so much, Vimalji, for giving such detailed analysis on, GST and its implication on businesses. I think so many important topics were covered in during this session today, right? And I would also like to take a moment and also share with our audience about Zoho Books, right? Which can help users to keep their business GST compliant. So, for those of you who do not know, Zoho Books is a comprehensive cloud financial platform that takes care of your business finances, from core accounting to stock tracking, bank reconciliation, managing projects, and to automating workflows, and everything can be handled easily in Zoho Books. So, if your business has been registered for GST, you can configure your taxes and also start, filing your returns with Zoho Books. You can file your GSTR1, you can file your GSTR3B, GSTR9, you can reconcile your GSTR2 and GSTR2B with Zoho Books. And as Bimalji also mentioned, in the GST regime, the government has introduced, e-invoicing to standardize the way businesses do standardize the way B2B invoices are reported in GST systems. So, setting up e-invoicing in Zoho Books is a one-time step and can be completed very easily using Zoho Books. So, what I have done right now is I've shared a link with you on chat. I'll do that quickly. With which you can actually sign up for Zoho Books and you can explore our product. We have also got 14-day free trial, so you can explore our product with that as well. So now, as Vimalji said, we'll open the stage for the Q&A session, and I think in the questions tab we've got many questions today. Let me just do that quickly. So I will project the question, sir, and
Yes, please.
as usual, yes, yeah. So the first question that have been asked is, we are taking eligible ITC as per GSTR 2B. How to take ITC when the goods are in transit in the month end?
My answer to you would be even though it might get auto populated in your GST or 2B, but you should take the credit only in the month when you're receiving the goods. For simple example, let's say your goods are being dispatched on 28th of month. So supplier must be raising the invoice on 28th of May, let's assume, and filing his GSTR1, and that is getting auto populated in GSTR 2B of yours for the May month. But you're receiving goods on 5th of June. Then credit is available only when you satisfy all the condition, including receipt of goods or services, which is June month. So even though credit auto populated in May, but you should take credit only in the month of June when you have received the goods.
Okay. I'll move on to the next question now. So Rohit Yadav has asked, can we access the session later? Yes, we will be sharing the recorded video of the session within 3 to 5 business days with you all to refer again. And you don't have to worry about that. We'll do that within 3 to 5 business days. Next question is asked by Saichan, how to claim input tax for SEZ businesses?
Simple that if you are SEZ business and registered in GST, though I understand that SEZ are being considered differently for GST implication. So if I'm a supplier to SEZ unit or developer, it is zero rated supply. So for zero rated supply, I have got two options. Either I can supply under LUT or I can charge IGST, and being supplier, I can claim all the refund, whatever refund of ITC when I'm supplying under LUT, and when I'm charging IGST, I will get the refund of IGST. So there's no question of SEZ unit is taking any ITC, but there may be some situation that SEZ is registered, then you can claim credit as per the normal provision.
Okay. I hope that answers your question, Sai. We'll be moving to the next question, which is by Nimish Shah. RCM entry in Zoho Books, please explain as we couldn't understand fall of entry when accounted in Zoho Books. So, related to Zoho Books, what we'll do is, Nimish sir, we have noted down your question. We'll get back to you with the detailed answer to in your email ID. So, we'll drop in detailed answer to you at the end of the session. Again, Ms. Narmada, you've asked why GSTR2B is disabled at Zoho Books. Again, any questions that are related to Zoho Books, what we'll be doing is we will answer them. We'll send out an email to you with all the answers within, by Friday or by Monday. So you don't have to worry about that. Next, Mr. Prakash has asked, what will be the GST rate when a registered GTA issued transportation bill to an UR recipient?
Prakash, answer to you, when you are supplying to unregistered recipient, then there is specific, exemption available under notification number 12/2017. So kindly have a check pertaining to that. Unless you are falling into the specified category as per reverse charge method under 13/2017, GST not leviable, it is exempted. So you have to read both the notification 12/2017 read with 13/2017. So if GTA is applying to unregistered recipient and unregistered recipient is not falling into any of the category, specified category, subject to RCM, then GST exempted.
We'll move on to the next question, which is by Mr. Amit. In 3B, supply is wrongly shown as 1,29,000. I'm sorry. I think it's 12,90,000.
They have wrongly shown at 1,29 lakh
Yes,
instead of
yes.
12,90,000 in 3B. That is the mistake they have done. However, the tax rightly deposited by Amit. What is the way out? His annual turnover is below 50 lakh and kindly guide. Amit, very, very interesting question and very, very difficult from the GSTN side. Yes, you have wrongly shown it. Now it can be adjusted only in subsequent month. There is no revision possible. But when you are going to revise it, do the adjustment entry in subsequent month, then by way of credit note, and it is not accepting the negative balance. So that's what the irony today on GST and common portal pertaining to such kind of problems. They are not picking up negative balance, and for that they are working. GSTN is working. So to me, what is well suggested that you can write back to your jurisdictional officer with raising a ticket to GSTN, so that tomorrow if they can help you out in this regard. But otherwise, on portal, there's no simple answer available.
Okay. So I hope this answers your question, Mr. Amit. We'll move on to the next question, which is by Mr. Harish. Is GST applicable on foreign bank charges under the reverse charge basis?
Harish, looks like to me when foreign bank is charging some money and that is charges for providing services, import of services, then reverse charge going to be applicable.
Okay. Next question is, I operate e-commerce startup. I run multiple brands, both B2B and B2C. How to account individual sale invoices? There is only one plugin for Shopify, DTC, and ShipRocket.
Nukul, very difficult because you have to make it, operational on your platform. Now, these B2B and B2C, if you need to segregate, you need to devise, you need to really create a setup in your system. Otherwise, tomorrow it will be a problem for you as well. How you're going to, create the data and file in GSTR1. GSTR1 separate table capture B2B, separate table capture B2C. So highly advisable, you must, create some setup within your accounting software.
The next question is by Mr. Hitesh. GST is applicable on sale of plot.
My answer is no. As per me, it is a sale of land. Even on GST on developed plot, my answer is no, because that will continue to be sale of immovable property, Schedule 3 transaction.
Next question is how to issue a ledger in Zoho similar to Tally when vendors and customers is in the same party. Again, related to Zoho Books, we'll get back to you, Mr. Nakul, on all the answers. We'll be sticking to questions that are related to the session that is on GST specific one. So we'll get back to you with the answers shortly. Next one is by Mr. Shiva. We have a boiler using for manufacturing the taxable goods. We want to sell boiler ash with free of cost to empty our go down area. What is the GST implication?
These are the specific, peculiar situation, fact of the case. He's selling out free of cost. So he's saying, I'm not charging any money. Now I'm selling it out with a GST, leviable, and as per the definition of supply, if no consideration, no chargeability, unless we are related parties. So those factors need to be looked into, but cross implication would be ITC reversal to that extent of common ITC, whatever you have availed.
Okay. Next question is by Mr. Vinod. If companies use their logo print on some product like bags and distribute it among the dealers or by way of schemes, can ITC be eligible to take?
To me, definitely, because these are sales promotion activity in the course of furtherance of business. But lot of doubt and dispute in the market. They are saying it is a free gift. It is not a free gift. I'm giving to my distributor and dealer to penetrate the sale, to promote my sale in the course of furtherance of business. And I'm sure in down the line from today and time to come, maybe 4 years, 5 years, I'm sure it is in the course of furtherance of business, credit would be available. It is not a free gift which I'm offering. Gift means when it is as per me, I'm giving an offering to general public. But these are bag which I'm referring to with printing of my logo. What is mean? What is the advantage I'm drawing out of it? Advantage is I'm just boosting myself. Sales promotion activity in the course of furtherance of business. To me, credit is available.
So the next question is again by Mr. Vinod. If the transporter charges 5% GST on forward charge basis instead of 12%, can ITC be eligible for the recipient?
See, if transporter is charging 5%, then ITC is not available to GTA transporter. But of course, 5% credit would be available to the recipient, provided the use for the taxable supplies.
Okay. Next question is, I'm sorry. Next question is, please explain about GST on travel agent.
It will require dedicated session, so it may not be so easy within a short span of time, but that is how the 5% rate applicable, 18% rate applicable. Then talking about air ticket, travel booking, hotel accommodation, car and everything, lot many things on travel agent. So I will request Jagdish ji to excuse me for this time, because this question requires lot of pointers need to be deliberated.
Okay. I think next question is on real estate. Please give a brief on GST on real estate and also what percentage we need to pay to JV for landowners.
So again, this is the real estate specific. A lot of things, Mr. Sivakumar, which we need to understand with a joint venture, joint development agreement. When we do, who is liable, at what rate liable, and then the question of 1/3 deduction of the land value, and then Gujarat High Court judgment coming in, the actual value of land can be deducted. Lot of things we can discuss. For that, we require to have dedicated real estate, webinar or seminar. See what happened. This is the open house session, and these are sector specific query. And sector specific query requires a lot of pointers need to be considered before deliberating and asking the queries posted here. So don't take me that I'm not willing. I'm really willing, provided Diksha is willing to sit with me for 2 hours, 3 hours, and we can carry on replying these queries.
So maybe in future we can have such proper sessions for give a little bit more time on the Q&A. But right now I think we started the webinar at around 4:30, and it's been quite some time. So surely Shiva and all other people who have asked questions that are a little bit specific to a particular industry, we will try to accommodate these things in the future webinars. Right. Next question is asked by Varsha. Sir, QRMP में date for quarterly return का concept क्या है?
Quarterly return, monthly payment. QRMP, quarterly return, monthly payment. So you make monthly payment, but you file quarterly return, and you are being given specific date which you can use, which is 25th. So that is how the advantage you get out of it, and that is a concept only for taxpayer having aggregate turnover less than 5 crore rupees.
Next question is by Chirag. When GST will become good and simple tax?
Oh, we all are wishing and dreaming for that. We thought of when GST got introduced. Chirag, I am with you. Really, we all are thinking GST should be good and simple tax. I do not know what is happening on other side, but at least I can say from our side, from my side, I'm trying to make GST good and simple tax.
Okay. Next question is, how do we issue invoice in case of tool is manufactured by seller and retain the tool with his premises for further manufacturing of parts?
This is again interesting one. I can only tell you that when you are issuing invoice for the tool manufacturing, so this concept is applicable when you get the goods manufactured by a job worker, by original equipment manufacturer. That is how the concept all about. To my mind, it is all dependent upon your client located. If your client is located, let's say within the state or outside the state, and these other concepts need to be looked into. It should not be considered that tool is being retained by you. And for me, credit chain should not be broken, because ultimately these tools are being used for the manufacturing purpose. So irrespective of fact that a tool retained by you, but it is meant for your customers. So you can definitely, let's say you are in Tamil Nadu, but tool is being manufactured for a client in Karnataka. Now, these tools are being retained within the state of Tamil Nadu, whether intra or inter. To my mind, it is interstate supply. And IGST should be levied so that credit chain should not be broken. That's what my analysis, and that's what I'm concluding in my humble submission.
Next question is by Mr. Mohit. Is GST livable if the stock transfer is made for consumption
Yes,
by the
yes,
transferee?
GST applicable on supply of goods, even though stock transfer between distinct person in the course of furtherance of business. When you're saying not for sell, then what happened? First you levy the GST, and then where you're not selling, it is going to be cost for you. But you can't say that it is not for sell. Then what happened? Ultimately, if it is not for sell, you have to discharge. Then if you're not charging GST, then the implication of reversal of ITC will come into the picture. So first chain supplying, stock transferring from A to B, it will go to B, and B is not selling further, then that ITC which is being availed become the cost.
Next question is by Mr. Ashok. I'm making supplies in domestic and as well as export. The export is made with lot without payment of GST. How the ITC claim of export part is to be claimed, as the ITC is claimed on both export and domestic supplies? Please
See,
advise.
Ashok, there's a specific table in GSTR1, and then you will find specific column in GSTR3B. So whenever you're domestically supplying, it needs to be captured in a specific table. Like table 4 is very important, B2B supply of GSTR1. Then you got table 3.1a of GSTR3B for domestic. For export, you got table 6 in GSTR1. Then you go back to a specific table of GSTR3B. So that is how it is being given in GSTR 1 and 3B, and you need to capture accordingly. When you claim ITC on export part, then table 4 of GSTR 3B is important when you claim ITC, which is mean for domestic and export. Then accordingly, when you are claiming refund, and refund is being driven with the export data, which is being filled up in table 6, that may be on payment of IGST or without payment of IGST and the LUT. So there is a specific column which is being prescribed, which you can follow and fill up the data accordingly in GSTR 1 and 3B, so that you get your refund on timely basis. You can avail the credit in a better way.
Next question is by Nikki. I'm registered in MP, buy goods from Delhi and directly send them to registered customer Mumbai to save transportation cost. I cannot open my delivery location to my supplier. How to address the situation, and do I need to take registration in Delhi?
It need not be required. It will be 10(1)(b) transaction of IGST Act. So let's say you are purchasing from Delhi. Delhi fellow will raise the invoice to you, Maharashtra, IGST. And since you are from a place you're talking about, let's say MP, which you're referring to, then you will be raising invoice for IGST. And that is the beautifully this transaction is being captured under IGST with one e-bill from Delhi to Maharashtra. So your supplier in Delhi will charge IGST to you, of which you will take credit in MP, and again you will charge IGST to your customer in Maharashtra with one e-bill generation 10(1)(b) of IGST Act. And no need to registration in Delhi, rest assured.
Okay. Next question is by Mr. Nikhil. As an export entity, we bought goods at 0.1% tax concession and exported them within 90 days. As there is no obligation to set off the ITC, can we get a GST refund as credit is
Yes,
secured?
yes, Nikhil, possible and permissible.
Okay. The importer is subject to IGST on ocean freight under RCM. Also, could you update me on the Gujarat High Court case regarding
I said the Honorable Supreme Court has given judgment in favor of taxpayer Mohit Mineral case, and on the basis of composite supply concept, they have said no IGST on ocean freight under RCM for CIF import. Cost insurance freight import. Nikhil, this has already been decided by Honorable Supreme Court.
We'll move on to the next question. Sir, in case I make a supply on credit or as customers delay payment, if supply is done today and customer makes payment after 2 months, when should I file my
You
GST?
will
This is asked
you
by
will
Rajneesh.
file GST, Rajneesh, as and when you're raising invoice, irrespective of fact when you are being paid. So when you are supplying goods or services, you will raise the invoice and discharge the GST liability on accrual basis. Maybe you are being paid after 2 months, but there's a specific provision. If your customer delay the payment beyond 180 days from the date of issuance of invoice, then he need to reverse credit along with interest. So at least one provision within the GST law which is warranting your buyer to pay within 180 days from the date of issuance of invoice. But you need to raise invoice as and when you supply and discharge GST liability.
Next question is on mining license by Shrey. 18% RCM is applicable, but forget to deposit the same on forward charge 5% is deposited. Now, on how much the GST along with interest is required to be deposited,
See,
whether entire RCM or balance tax liability.
Shrey, this point is being disputed whether RCM applicable on mining, and that's what this matter is subjected before Honorable Supreme Court, and a lot of High Court are not hearing these cases. They are keeping it pending till the time this matter is being decided by Honorable Supreme Court. So paying 5% and 18% is the secondary question. First, on chargeability, this is being disputed and litigated before the court, which is subjected before Honorable Supreme Court. To my mind, this matter may have implication, but let's see how Supreme Court decide this subject matter. But as on date, you should not deposit. But at least what you can do, which is suggestion from my side, if you're thinking that this case may go against you, you may pay the tax under protest so that your interest meter stop today and wait for the judgment to come in. So once matter decided in favor of a taxpayer, then whatever you have paid under protest, you can claim refund of the same. But in case it is being decided against, then of course you're supposed to pay, and then this interest, that meter is being stopped. To that extent, you can safeguard yourself. So you have to decide as per your business exigencies.
Next question is by Krishnakant. Andhra sells imported goods to B, who's in Tamil Nadu. Delivery order is issued to B to take delivery from the port. Regular invoice raised to B, not bill to ship. B further sells the goods to C, that is in Karnataka, from port. What should be the POS and charge of GST for above?
I said this transaction, Mr. Kriskan, just while ago answering one query, that A, Andhra sells imported goods to B, Tamil Nadu, right? And delivery order is issued to B to take delivery from the port, and regular invoice is raised to B, not bill to SIP to. Now try to understand, I've said if it is 10(1)(a) transaction, then also you're picking up the GST number of B of Tamil Nadu. And now B will take the delivery and deliver wherever he wants. So ultimately it should be IGST, then credit going to be available. If you charge CGST and SGST, then that credit will not flow to the registration GST number of Tamil Nadu party. To my mind, 10(1)(a), where supply involves movement of goods either by supplier or recipient. In this case, recipient you're referring to, where delivery terminates. So accordingly, transaction would be intra and inter, but at all situation, if it is IGST, then only your buyer will get the credit. And second, B further sells the good to C, Karnataka, from port. What should be POS and charge of GST for the above? 10(1)(b) then going to be applicable. First transaction IGST, another transaction IGST, and that is how this credit chain will work. And credit will flow seamlessly as envisaged, as one nation, one tax.
I hope that answers your question, and we'll move on to the next one. Just a reminder, we'll be taking questions for just next 5 minutes. After that, we'll have to end the session for today. So we'll go on with the question that is asked by Mr. Ramesh. As per Rule 89(4)(c), it says 1.5 times the value of goods domestically supplied. But why? What if a taxpayer doesn't supply in domestic market? Only export of sales is there.
Mr. Ramesh, we have filed a writ petition before the Delhi High Court on similar issue. When I'm not having any domestic supply, where from I can do 1.5 time, and this 1.5 time which is being referred under Rule 89 sub Rule 4C to me, these rules are contrary to the provision of the Act, and these are the disputed point, though it is being made effective from March 2020, but these rules are contrary to the provision of the Act, and it can't be possible. In that case, they're the one circular number 147. If you're exporter, then they will not be changed because your nominator and denominator would be same, and you would be entitled to get the ITC on input and input services. But I've given you both the things. If you're exporter, then 1.5 time will not create any restriction because of nominator and denominator are same. Circular is also helping you, circular number 147, and still we have gone to the High Court and filed a writ petition whether this rule is really within the provision. We have said it's ultra vires the provision of the Act, and we have created it is ultra vires and contrary in violation of Article 14 and Article 19(1)(g) of the Constitution of India.
Okay, I hope that answers your question, Ramesh. We'll be moving on to the next question. A supplier's loss of business, totally business is closed. How to GST amount recovery?
Supplier loss of business, totally business close. How to GST amount recovery? Maybe loss of business, totally business closed. How to GST? Your question is not clear to me, but I could guess you're talking about when business is discontinued, how I can recover the GST component. Now, see, you may have GST component to be recovered from your customer, along with your, value, along with your consideration, and there may be ITC lying with you. And what you will do with that ITC when you are closing down the business, unless it is zero rated supply. Unless it is zero rated supply, there is no refund mechanism pertaining to the closure of business, and that is what the provision has on date.
Okay. Next question is by Neville Kumar. I have registration in Gujarat now and I have to go to Tamil Nadu. Then I can go ahead with my old number by amending registration or take a new one.
There's no, you're moving from Gujarat to Tamil Nadu. There may be a situation that you're registered in Gujarat, now you're going to Tamil Nadu. So you're shifting your business to Tamil Nadu. So there's one specific provision for shifting a business from one state to another state. You need not require to take new registration. You need to comply with the provision accordingly. Or you can do one thing, you can surrender your Gujarat one and take new registration Tamil Nadu as convenient as possible. But to me, when you have taken registration moving from one state to another state, you can definitely go with a transfer business concept and no need of taking new registration.
Okay.
Maybe the
next question
maybe the last one, Diksha.
Yes. Next question is by Saurabh Madan. If registered person purchase goods from China and supply to USA, bill to ship, supply good from China to USA directly, but billing made to Indian person, then both the transaction treat as import and export of goods?
No, sort of, no. It is neither import because goods are not entering in custom frontier of India, neither export because it is not going out of India to a place outside India. So it is not satisfying the condition of import and export, please. But it is not chargeable to GST because of the para 7 and para 8 of schedule 3, which we have discussed in our session today. No GST leviable and no reversal of common ITC also pertaining to GST provision.
Okay. So with this, I think we'll be ending our question and answer session as well. And thank you, Bimalji, for answering all the questions and educating, our audience on the GST implication. And for our audience also, I hope the additional info and the whole session was beneficial. We'll be sharing the webinar recording with you all within 3 to 5 business days. And also do not forget, we'll be selecting 5 lucky winners who will receive the ultimate GST handbook that is from authored by Bimal Jain himself. So the lucky winners will also be announced soon. So please keep an eye on the social media. Follow us there, and we'll announce the winners soon. So if you guys need to reach out to us on anything, you can reach out to us. You can drop an email at sales@zohocorp.com, and you can also give us a call on this number. And if you want to share your reviews of the webinar with us, you can use the hashtag GST with CA Bimal Jain and hashtag Zoho Books, and you can share your views with us. So thank you once again, Mr. Bimalji, for doing this webinar and for taking your time, time out to interact with all the users here. Thank you so much.
Just try,
Yes.
1 minute. Vishal Gupta is saying, "Aapki muskaan badi pyari hai." So here, thanking each one of you that who were the part of today's webinar, and we have tried our best. मैंने कोशिश की हिंदी बहुत कम बोला because pan India we are attending today. That's the reason I'm not use Hindi, but nevertheless, from my heartfelt, from core of my heart, thanking each one of you. Keep loving and blessing us. That's what we all are looking for. And keep loving to yourself and blessing to yourself. That is very, very important. Apna khayal rakhiye and pray for everyone in this world that we should be happy. With this, allow me to say thanks to each one of you. Thank you very much. And thank you to Zoho Books, Diksha to you as well. Thank you very much.
Thank you so much. Thank you, everybody. Take care and see you in the next session.
Thank you.
Yes.
Thank you.
Bye.